Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we are seeing red arrows around the world this morning after the four-session rally in our markets ended yesterday on Fed Day. Although the Fed did what everyone expected and did not announce tapering, stocks still sold off. So, Scott, what do you make of that?
I just think people were looking for some type of excuse to take some profits, to maybe have a down day. You know, we kind of knew that the Fed wasn't going to do anything, and I do think that perhaps, you know, the street's getting a little numb to the word QE, and investors also are getting numb to it, and they just want to see progress in the economy. And I think at this point, you know, there's more frustration out there when the market makes a new 2013 high versus celebrating.
Right. After 2 good months in the market, it's still not being celebrated, that rally. What's behind that sentiment?
I just think there's not enough people involved. You know, from between the media and the fear-mongering and what's taken place over the course of the past decade, you've just seen so many people leave the market. Okay, so with that being said, you know, you open up the newspaper and you see new all-time highs and you're not in there, there's frustration. If you're a professional trader or even a money manager and you try to outsmart the market and try to have too many hedges, or you try to, you know, take profits too early and it keeps going, you know, you also don't feel good. So with that being said, you know, the size of this move that we've seen is frustrating people that aren't involved. But I will say there is a lot of people involved as well. You have macro investors. So we talked about this before. If you were a baby boomer and you started putting money in a 401k, which is supposedly the plan, before 1987 even, you know, just say you're almost 70 now or 65, okay, you survived 1987, the crash, you survived 1998, you survived 9/11, you survived the financial crisis, you then survived the Mayans, right? The Mayans said the world would end. You also survived the government shutdown, the debt ceiling, and here we are at new highs. So all you had to do is stay the course. But when everyone out there calls for these major corrections and all these influencers who talk about the next crash, it keeps people away. So it's just a little unfortunate.
Well, why don't you show us then the levels that we should be watching? Because when we don't know what to do, right, we look to the chart.
Yes, and then if you look here, you know, at the chart of the S&P, you will see that, you know, this is what we're talking about. First of all, this is the trend that's been intact since last November, that nice little red dog reversal that stayed intact during the course of this year. And you could even go further back just to show you that the rally started way before that. Look at the trend that we've been, you know, seeing all the way back here from, you know, 1100 a few years ago, okay? Higher, low, all the way up. So with that being said, we've come quite a long way. So as a active trader, professional investor, you know, you want to sidestep some moves like this. When you have an outside day, then you get corrective activity, or a head and shoulders top and get corrective activity, or a false breakout like you had here where we broke above the prior high. You know, 2 sessions later, we retraced it, and then you had corrective activity. So now here we are coming up, you know, to this level. So the question is, what happens now? Here's your first, you know, somewhat down day. So in order to see some type of corrective activity, perhaps down to 1740 or even the prior breakout, we're going to have to trade below yesterday's low, 1757. So, you know, we could go sideways here, you know, kind of like what we did right there, and then continue. That would probably be frustrating. That would keep the pace of this move, you know, really strong. But I think, you know, what would be better would be just a little bit of a corrective move, so this way people don't continue to feel like they have to chase and miss out.
Right. And it seems as though it's not just the fact that people aren't celebrating the rally. We're actually seeing, as earnings season continues, solid reports getting sold off, like Facebook. Good report last night, but sold off. What do you make of that wild ride?
Well, first of all, it's doubled since the quarter before. So it needed to be like blockbuster in order to continue. So when first the earnings report came out, you know, we were like, wow, this is great. You know, 25 cents versus 19, revenue's up, the whole spiel. It started going up. Guys were buying it through the prior high of 55, because that's what we do technically after hours, went to 57, and then it started to run out of gas. And then the number came out, or the talk came out that, you know, that some teams were leaving, and then you saw that momentum sell-offs. But if you look here at the chart, really not the biggest deal. Okay, here is that cup and handle pattern. This is when I was on with Kramer talking about how it can get back up to the IPO price. You know, this was after the last quarter earnings, how it digested above, and then you had this nice rally all the way up here. So with that being said, you take a closer look here. You know, here's your basic trend since that earnings gap, and here's where we pulled back into, and now this is where we're opening, somewhere around 51-ish. So with that said, if you took options, you know what, you probably lose a little bit. If you traded the stock, maybe you caught both ways, or maybe, you know, you overtraded it. But at this point, if you're involved from the cup and handle and you're worried on an intermediate basis, I'd say this is your stop. Just use 48.75, because if it breaks that, you know, maybe you see some more corrective activity that you don't have to sit around for. You know, but as long as it stays above this, I say, you know, give it a little bit of time, don't overtrade it, and then at some point maybe it makes higher highs, but, you know, at least you have your levels here. So this is where it was last night.
All right, well, let's check the temperature of the different sectors so we see what we're working with here. Let's start with the Qs, which did manage to close off the lows and held above the 8-day. So what do you make of that relative strength?
Yeah, relative strength, still above the 8-day. Every bear is crying about technology, but if you look at the chart, still looks good. You know, I would say that it's getting a little choppy up here with these wishy-washy candles. So in order for the, you know, the market to correct, or the Qs to correct, or technology to correct, you need a move below 82.50, and then that would take you perhaps to the 21-day and that gap.
Now, the Russell got hit harder, dropped about 1.4%. Would this be a signal then that we may get more corrective activity?
It's a day to take notice. You know, if you've been riding this trend and riding even the accelerated trend, you get a day like yesterday, you say, okay, you sold some stuff into strength, hopefully, and then maybe you have a high-level stop. And if you look here at the Russell, the IWM, look at the size of this move, okay? Always holding this trend line all the way up. You know, and every time it seems to get to the upper end of it, you know, I guess you could draw it like this, you get some type of corrective move. So maybe that's going to happen right here. You want to take a closer look, you'll see that this was an engulfing bar. Okay, an engulfing bar had power and engulfed this whole entire upper range. But in order for more downside, it's going to have to get and stay below 109.52.
Now, should we be looking to the financials for clues as well? Because we've seen some upside momentum slow there.
You know, we've seen financials slow down, but a lot of people who were shorting based on that in the last week and a half because they didn't make new highs, they've been getting hurt, you know, because other sectors took the lead. But with that being said, it's always good to know what the financials are doing, and we'll see what happens here. You look at the XLF, you'll see, you know, it's still, you know, just to give you a bigger picture, here's, you know, one trend line that's been holding for a long time. Here's your more accelerated trend line. And then everyone's crying about the financials, but look where they are. They're right here. Okay, so the question is it going to fail there? Okay, or is it just digesting for a bigger move? So with that being said, still above the 8-day. You know, if the financials were to start getting below 2070, you know, maybe you get some more corrective activity, and then there's your 21-day, which comes in right here. But if it stays above this and starts to get some green candles, you know, you're not going to see much of a sell-off in the markets if this starts taking out 21.
What about the Homebuilders? Retraced more than 1%, but held above the 8-day.
You know, this group still looks like it's trying to, you know, be relevant or more relevant as the Fed seems like they're going to keep rates lower longer. This is getting some attention again, whereas for, I think, most of the third quarter, it was out of play. So you look here at the Homebuilders. You know, we talked about, you know, getting involved with this group here, okay, when it broke above this, you know, mini downtrend, and now it's trying to hold higher. So in order for this to stay, you know, you know, stronger, or stay where money should be rotated to, it's got to hold above 30.80. 30.80. If it doesn't, then you get a retest. If it stays here, maybe this flag type pattern could help go to higher prices. So it's definitely something to watch.
And we talked earlier in the week about how consumer staples had led the market up during the rally, and it had a smaller pullback yesterday, about 0.8% or so, but it closed on the lows. So are you expecting potential more downside follow through today?
You know, again, when you get a day like yesterday, if you've enjoyed a big move, you clean up a little bit. It doesn't mean it's game over. It just means it's a down day. And if you look at the chart, you know, look at this channel here. So from the lower end of the channel, it busted through the upper end, which gave you a nice breakout trade. And then yesterday's bar was, you know, a bit engulfing. So maybe it does lead to more downside. So with that being said, you know, it's going to, again, you know, write down all these points. 42.46. It gets below that, then you have 42.18.
All right, well, coming up, we're going to go in the trenches with retail, where some names are looking better. But first, a quick commercial break. We'll be right back.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
We're back and going in the trenches with retail, where some names are looking better. Target had more than a 2% gain yesterday and closed on highs. So will this be on your radar today for some upside continuation?
Well, it depends on your time frame. For a macro investor that wants exposure to a big name quality company like Target, sometimes these type of pullbacks don't happen often. So if you look here, with Target, as far as a technical trade, I remember this a little ascending channel here that broke to the downside. That was one signal to get out of your target. Here was another trend line that broke another signal. So now it's been trading down here in this lower area. So yesterday it poked its head above it. So with that being said, we talk about a day one. Well, here is your potential day one through a downtrend. So that could wake it up. So with that being said, I'm long a little bit, and if we were to trade above 65.95, perhaps we get some kind of cash flow trade to here. But overall, if you wanted an entry in Target for the longer term, and you got out here or got out there or never owned it, this looks like a decent spot.
What do you think about JCPenney? We did see that one perk up a little bit yesterday. Do you think we'll see some continuation there?
This stock's been left for dead. It's trading as if they're saying it's going bankrupt, but the company keeps saying no. You had that bad deal, a month ago or so when it was at price. They said all this good news and it went to 10.5, and then they said, oh, but we've got to tell you there's a $9.5 offering. So that just created a mess with the stock. So recently that's been consolidated, and it seems like it's behind it. You look where the stock is. It's from the size of the move that it's seen, from all the way up here to where it is now. This is kind of like your treasures for trash trade. If you've been long from here or here or here, it's in your trash bin. If you never bought it and you were looking for some technical opportunity, it could be a treasure for you percentage-wise. So I think I drew this last night where this was the first day that I got involved. Took the trade off here. Then yesterday got back involved, and now it seems like if it could take out, 777, maybe it's on its way to $9. And percentage-wise, something to do. And in this type of market, when you're that extended and people need to play catch-up, people are looking for some things to do.
Could Walmart be something to do? It's been in an intermediate descending channel since about March, but was able to reclaim the 8 and 21 day recently. So what do you think there?
This, I don't love the setup right now. It's already had its bounce, but if we take a look at it just to see what it's doing, it already came off the lows. Like this was your day one there, and now look where it is. I would say it's got to hold above 76-ish in order to stay relevant, to continue. I want to take a quick look at Costco because we don't have it on the list, but I remember looking at it the other day. This is actually a little bit healthier. Okay, one of the few retailers that are getting close to highs, at least the bigger ones. So I would say Costco may be a little bit of a better setup. So as long as it stays above this area, maybe if retail is going to go, this is in the cards right there.
All right, let's do some quick hits here and talk Apple. 1.6% gain yesterday after the pullback on Tuesday. What are the levels you're watching?
You had a wide range bar that was a little ugly from earnings day, but relatively speaking, it took it in stride. You look here right now, a little digestion up here, and I think that it could rebuild. If you look at the chart, this was that lower area. Move number one was nice, move number two even nice, and then that was your earnings day. So the question is, can you get some short-term trades there, or could you buy it for a move into the fourth quarter? I'd say short-term, as long as it stays above this 515-ish. Okay, I think that traders will have it as an A trade and let it digest. If it breaks that, you could see some lower prices. If it holds here, I think your next pivot for a cash flow is above 527. Above 527, it really negates the ugliness of this candle. It might take a few sessions, but then overall, can create another flag for, new highs for 2013.
And Google continues to stair-step higher. Seems like we keep talking about that 1,010 levels, the key level of support to watch.
Yes, that first it was 995, then it was 1,010, and as it keeps stair-stepping, you want to make sure the higher stair steps stay in place. So with that said, still looks good. Here is your big gap up after earnings, really nice option play. This was a nice continuation, and now it's looking really good right here. So with some time, if it could stay above, like you just said here, this like 1,010, 1,013, it could make another attempt to get above 1,039 and be on its way for a fourth quarter move to 1,100 plus.
Amazon also holding higher after the earnings gap. What do you think? Higher prices still in store?
Well, as long as it stays above the earnings gap, traders will have it on their radar for continuation. If it changes, it changes. But right now, big gap up, no follow through yet. It looked like it tried to go yesterday, but the market got weak. I'd say the longer it holds this big earnings gap, you never know how long it's going to take, the higher the probability of a breakout. But if it starts to give way, there's a big gap underneath it. So I would just, look for active trades here in a smaller time frame.
And Netflix, we talked about how this one has not held up well since earnings. Are we still bracing for more downside action?
Well, whenever you get a stock that opens up $50 and then goes negative and gets crushed, it leaves that huge scar on some investors, especially since Icon sold half and now they're like, okay, when's he coming in for more sales? So you look at the chart here and you'll see that, here is that huge earnings gap that failed. Then it tried to bounce back and wasn't able really to take back, a third of it, which still shows that this is in control. We had a small little trade here around 311, and then yesterday it was weak. I'd say the longer it stays in this area, maybe the higher the probability that you can get another move lower. So at this point, it's just a trading vehicle. I think as far as the trending investment that it's been, since Carl talked about it below 100, I think is over. And for this trend to change, it's going to have to break and close below the 50-day, and that could lead to a move down to this 274. So I'd be careful here. And if you're looking for, a composure change, a break and close below this would be another one after this huge day to take notice outside event.
Well, we will have more earnings coming up today. We'll have earnings from Exxon, Starbucks, AIG, just to name a few. What will you be focusing on today?
You know what? I'm going to see what happens today. It's the last day of the month, so sometimes they try and keep things up. I personally would like a little bit of a pullback. I came in today net short. I still have a few longs, but I took an extra few, shorts in the spiders, and I also bought some puts for next Friday, thinking maybe we get a little softness. But again, not doing too much because that hasn't worked out yet. So I think at this point, most traders are just trying to find quality setups, and they're different each day. Each earnings report has been treated differently depending on where the stock came from, what type of report, what the expectations were. We've gone through probably more than half of the earnings, and some responded well and some didn't. Some are going to be in the penalty box for a while and go from the A list to the C list. So at this point, just kind of know what's on your A list, and I don't see that many A list type trades. And if you don't see that many A list type trades, do a little less. Sometimes low gross, low net could save you money versus trying to force some trades.
Right. And take your kids trick-or-treating tonight.
Yes.
Right?
I'm going to try and get home early. See
Well,
the boy.
Exactly. With that said, happy trading, everyone. Have a great day and happy Halloween.